It's time now for our 360 round. We're discussing Spotify today, rallying about 16% right now after notching a fourth quarter earnings beat on the top and bottom lines. The audio streamer saw monthly active users rise 11% year over year, with premium subscribers rising 10%. Spotify's guidance for the upcoming quarter arrived largely in line with estimates. Joining us to help break down some of these numbers and the reaction we're seeing this morning, David Schulhoff, the founder and CEO at Music LLC, and Seth Schachner, the managing director at Strat Americas. Great to have you both with us. David, let's start with you. We're seeing a really positive reaction to the numbers we got from Spotify, up more than 16% now in terms of what we're seeing. What do you think the market is reacting most strongly to?
Okay, well, first, Spotify got corrected tremendously in the last, 6 months, 12 months. It was down, 30 to 40%. So I think investors are excited to see a really strong quarter, and they recognize that, Spotify is an undervalued stock today. The revenues were up, paid subscribers were up. So Spotify is a de facto leader, and they're also moving heavy into audiobooks, into podcasts, into live music and ticketing. And so Spotify is really becoming not only a music company, but a very big multimedia company.
And Seth, based on what David just said today, is today's move about fundamentals improving here, or are we seeing sentiment finally catching up here?
It's definitely both. I think, premium subscriptions is what Spotify was originally set up to be about, to generate those convert free users. So, on the fundamentals, they've expanded internationally, and free is always really important in markets where folks can't afford subscriptions, basically. And, there's an enhanced sort of free tier that they've offered, and that's extremely important. But the premium subs are also way up. So, it's that. And then, the real thing I see, kind of building on David's point, it's a truly integrated audio platform now, and it's really getting its arms around social, which I think is a big part of the future. And you're seeing that with this thing called rap that's now kind of part of the social zeitgeist, if you will, at the end of the year. So it's a very positive story.
And David, we talked about subscribers there. Both of you mentioned it. We saw double-digit growth, both subscribers and in monthly active users. Can the company realistically sustain that pace from here?
Oh, revenues are up, 10%. Music continues to be very undervalued and undermonetized. They continue to raise rates almost every quarter. Look, at $12.99, which is, I think, where you are, that's like half of what you pay for Netflix or HBO Go, or maybe a third of what you pay for ESPN Plus. So I think the company's going to continue to raise rates and is going to continue to show, strong earnings because, music's cheap.
And Seth, David just mentioned that they raised the prices again. We saw another price increase here for the U.S. As far as pricing power, how much do you think that Spotify really has before we start to see some churn here? And also with bundling, does that give them more pricing power as they have music, podcasts, their audiobook segment growing, now this video component here? Does that give them more room to continue raising prices?
I think they've been pretty conservative about price hikes, to be honest with you, because they started fundamentally as a music machine, if you will, and they're well into audiobooks and podcasts now. But I think they are very undervalued compared to some of the other players in the ecosystem. So, I mean, the wisdom is usually when you raise prices, you're going to lose subs. Netflix sees that a little bit, but I think Mr. Eck and his team have room to push. I mean, the thing about podcasts that Spotify that's kind of hooked me is just the extensive playlisting, the new release radar that comes out every week or so, the regular, programming of podcasts. It's really something that I think has, hooked a lot of people. So I think they've got, for sure, room to raise those prices.
And David, you both highlighted that they're moving beyond just music. They're evolving into potentially more than just a music streaming business. Do you actually think the market is fully appreciating that shift yet?
Yeah, so they're starting to recognize that. I think in the audiobook category, they now have 500,000 audiobooks in many different categories. They have a partnership with Netflix. They have something like 50,000 video podcasts. They're moving into ticketing. Look, by having the artist, they can upsell tickets. They can do merchandising. They can, they have a 360-degree approach to generating more revenue. I think this is really early days for what Spotify could become. They could become one of the biggest music and multimedia platforms in the world. The big questions are, what does the content cost to acquire them? When they sign, whoever it is, Alex Earl or, Joe Rogan or whoever, what's the cost of bringing them on? and that can get very expensive, and that can, dip into their margins. At the same time, what are their royalty rates going to be to the labels and to the artists? Can they improve those rates? Those are the big questions as they continue to grow. Just because their revenues grow doesn't mean their profits will grow.
Yeah, certainly a lot of moving parts here. Looking at their video growth, they've got more than 500,000 video podcasts right now. But Seth, let's talk about this Spotify Netflix deal. It's not a merger, it's a distribution deal. So it's a little bit different in terms of structure. What does that tell us about how Spotify views its content? And also, does letting its premium content live outside of the app help or hurt its long-term platform value?
I mean, it definitely helps it. It provokes a couple things. I mean, short term, it's a great marketing partnership, distribution partnership for eyeballs. And I think the landscape, not just in audio, but increasing out here in LA in video, is for, cross collaboration and cross selling of content amongst a lot of different platforms, less exclusivities, if you will, which is what Spotify has kind of pulled away from. But I think it makes a lot of sense to integrate that. I mean, the real big gorilla here is actually YouTube. And I think a lot of people have their eyes on that ball. And how do you compete with something that is becoming, a much broader, threatening thing across a lot of different content verticals? And I would kind of watch maybe the space between Netflix and audio to see what goes on there, because I think there's, whether it's with Spotify or with others, I think that's what is going to be looking forward in the future. But no, there's no question they're expanding this podcast universe. And I also think, to David's point, there's a ton of stuff around social and artists, even with AI. And, you're starting to see them experiment with it. And so there's a lot of things they're breaking away with now from the traditional label, music audio licensing game, which is unprofitable and kind of a static business, if you will. So it's very promising for me when I look at it.
And Seth, you say YouTube, and I think of ads, of course, which is a big swing factor here when it comes to Spotify. David, what needs to happen for advertising to become a more consistent earnings driver for Spotify?
Yeah, well, look, clearly they need to integrate their ads into a lot of the programming that they're doing. They need to come up with innovative ways to target those advertisers. And so I think that's an area that they need to work on.
And Seth, what do you see as a potential risk here to Spotify's growth story as they are sort of diversifying away from being just a music streamer? Are there any concerns that you have?
I mean, there aren't many people in the artist landscape that like Spotify. I work with a lot of artists out here, and, they make pennies from streams basically at best. So I think the risk is that they alienate some of the core constituencies, maybe not the labels, but some of the creatives that could help them, build some of these new businesses, whether that's selling tickets or merchandise. I think AI in particular scares a lot of creative interest for obvious reasons, not just in Hollywood, but in music as well. So I think that's an incredibly important thing for them to think about as they start to pivot away from just being a pure play audio streamer.
Well, I appreciate you both being with us to break down this move to the upside. Still more than 15.5% we're seeing for Spotify this morning, and also to take a deep dive into the numbers we got from them this morning. David Schulhoff, founder and CEO at Music LLC, and Seth Schachner, the managing director at Strat Americas.